Good morning and welcome to Trade Talks with Jitesh. This is a video for weekly review. Last week, what was the trade we have taken? What were the key points which we need to remember? And the next week trading plan. So let's dive directly on the charts. So let's start with the Nifty weekly charts. This shows a volume distribution and a mean at 17,500 for the rally which was been continuing since 16,800 to 18,400. The mean is at 17,600. And second very key important point is there is volume distribution which is happening at the higher end. So if there is any breakdown below last week low, we might see consolidation move till 17,500, 17,600 levels. So this kind of volume development happens when there is a distribution in a given rally. So this is clear indication that any breakdown below 17,000, below 18,000 level, we might see a further momentum picking up till 17,500 levels. So these are the key points. And similar thing is in Bank Nifty. Bank Nifty also, when we see volume distribution is happening on the higher end, this point, and this volume distribution, this kind of volume distribution happens, and if there is a breakdown below this volume distribution level, around 43,200, 43,300, if we give a close, a strong close, then we might see consolidation move till at least 41,900, 42,000 levels. So this kind of move can come into play. So let's have a review on what were the trades which we have taken last week and what were the basic setup we planned for the last week and how did it perform. So let's see that the scenario number 3 and 4, which we discussed in the last week review session, has come into play. Market did go up, took a rejection, strong rejection, and market came down very aggressively. We were keen on taking, we were keen that market might halt at the 18,150, 140 levels. Market did halt, but it stopped us out, and then market continued towards upward. And then the market closed somewhere here at 18,192. So scenario number 3, which was highly probable as discussed in the last week review session, has come into play. VIX has dropped from 12.8 to 12.3. As we can see, at this particular place, market was at even the VIX touched at 13.3, and then it collapsed to 12.3. There was sharp selling from 18,460. This supply zone is active. This supply zone is active, and I feel that this supply is taking over for the major selling portion. Then the demand zone at 18,054 levels, this demand zone has come into play. So both supply zone as well as demand zone is prominent. Once we get a breakout out of this zone, then we might see further upward capitulation move, or breakdown beyond this point, we might see a further downside move. The range what we expect is 18,500 to 18,000 level. So any breakout beyond this point, we might get a strong directional move. Till that time, market might be in a very strong, very narrow consolidation range. 18,000, 18,500 would be the very strong consolidation range till we get a breakdown or breakout. Secondly, the USD INR is moving high very aggressively. We have seen that within just 2 weeks, we this strong upward shift in US dollar is not good for Indian market. It puts Indian market under pressure. So if Nifty needs to move higher, we need a further strength movement in IT stocks, because as USD INR is picking up momentum, so similar thing can be seen in IT index as well. So if IT index is picking up momentum and it's going further up, then we might see this capitulation move on the upside. I'll just put the IT index. So this IT index, when we see there was a very strong upward movement, which we can see evidently. So this upward movement, if market continues to go up in the IT sector, then we might see Nifty breaking out beyond 18,500, 18,600. But one more thing, a very key aspect is that Bank Nifty is underperforming for as of now, and Bank Nifty might tend to underperform, and a sectoral fund rotation or sectoral volume rotation might come into play. Bank Nifty might consolidate for a couple of weeks, and a major fund might go into IT index, and this IT index might pick up momentum. If that kind of scenario comes into play, then we might see Nifty index to move higher, but Bank Nifty wouldn't move that aggressively. It might consolidate on a very narrow range. So trades what we have taken, let's dive directly on the trades what we have taken for the Nifty and Bank Nifty. Excuse me. Bank Nifty Monday we went short at this particular place, which stop loss got hit of 1 hour. Then Tuesday we took short trade at this particular place. Monday was the opening of the short trade, but we booked our profits on Tuesday of 2 hour. Then Fin Nifty trailing stop loss got hit of 0.5 hour. Wednesday Nifty long trade stop loss. This stop loss Wednesday got hit. Bank Nifty short straddle on Wednesday. Stop loss got hit at this place. I was expecting market to consolidate at near this particular area, but market went all the way down. So our short straddle stop loss got hit of 1 hour. Thursday SB because of SBI volume and Nifty sudden movement, which was very evident at this particular place. So because of this, our trailing stop loss got hit and we got out by 0.5 hour negative. Now Friday, our target got hit. This was the trade we have taken. Friday at the closing, we have not at the closing at 1:2 risk to reward ratio. We have closed this trade at this particular place. So we have got 1.5 hour. So net 2 hour negative. I'm closing for this week, including brokerage. It is 2.5 2.7 hour negative in total. Last week was also negative by 1.6 hour. So as of now, this month I'm not running into profits. Let's see. These were the trades which we have taken last week as well as this week, both negative weeks. And for the next week, there are a couple of key points which we need to keep in mind. Firstly, VIX has dropped significantly to 12.3. So that hints that the volatility for daily, it might be around 141 points. For weekly, it might be at 310 points. So we might see 141 points of movement on intraday basis and 310 movement on weekly basis. USD INR has increased by 0.8%. That puts a pressure on index. And US is on the upward movement, as we can see very evidently that market is moving very with a significant momentum. So this consolidation has broken out and market has started trending again on the upside. DAX is trending very strongly, very aggressively. Asian market is still consolidating in a very tight range. It has been almost 4 months since the market consolidation has been there. So we might see a capitulation move on either side. Last week of the May, this is, so we might see a high volatility. A range extension might be there. Yes, this is a very key point. We might see a range extension. Range extension is where the week high is taken out. As last week we can see that both highs and lows of last week was taken out. This high was taken out and this low was taken out. Uh, so this high was taken out and as well as this low was taken out. So this kind of range extension movement might further continue in this week as well. We might see beyond this point, then again fall back and consolidate, or we might go down, again rise and consolidate. So there might be breakouts, but failed breakouts might be there, very much keeping people on the edge because people are expecting this breakout to happen. So after breakout, if there is a strong momentum on the upward, then at that time we can confirm that market might go further up. So as of now, I expect that market might go beyond certain place at 18,500 level, giving us a sign of that there might be a breakout, but failed breakout might happen and come into play, come fall back. So 18,500 to 18,000 is a very strong consolidation range. In this range, we might see volatility to continue, and range extension and failed breakout might continue rampantly. And the scenario analysis, let's dive directly on the scenario analysis. So as we see that there are 5 scenarios, as we always have. So these are 5 scenarios. So in this 5 scenarios, there are certain levels which we need to be very careful about. So first scenario is where market takes a very on a very strong bull run, very strong upward shift of market. So for this confirmation, we need a daily ATR of at least 140, 150 point, strong momentum on the upside, a close above 18,380 level, consolidate, and then again market to continue. So this kind of movement you can see and confirm that the first scenario might come into play. The second scenario is where market might go up, take a rejection at 18,340, consolidates for the further time, and then a slow and steady rise at this particular place at 18,500 level. So for this, I expect a radius of 15 points of range from all the way from here till here. And for this, for scenario number two, 300 points of radius, 300 points of volatility. So most likely, scenario number one is very less probable. Scenario number two might come into play if we get a consolidation move at 18,330 level for 1 or 2 days, and then further breakout beyond 18,300, and then taking all the way to 18,500 level. So this kind of move can come into play, which is very much probable that my scenario number two might come into picture. And scenario number three is where we see an insider candle, a range of 18,450 and this 18,000 levels, 18,048 level. Market might consolidate in this particular range itself. An insider candle might come into picture. So 18,300 to 18,150 levels, 150 points of very strong, very narrow range consolidation might happen. So in this kind of thing, Monday or Thursday, there might be a strong movement on the upside, and the consolidation happens for the whole week. So this kind of movement we need to be very careful about. So I'm not trading very aggressively as of now. I want to see how the market reacts at particular levels. Short straddles, yes, bullish queued short straddles can be done if we see a 18,369, 18,370 levels, a close above that particular place, then we might go into bullish queued short straddle of 18,400. So that market consolidate at this particular place, we might have a good trade setup. But as of now, let the market reject this place and then come down so that we get a confirmation that this is the scenario. And for the scenario number three, I expect that market might consolidate for this whole week, but that is very less likely because this is the last week of May, and expiry shuffling and rollovers might happen very aggressively. So we might not see third scenario where market consolidates in a very tight range of 150 points. But anything can happen. And then the fourth scenario where bearish consolidation happens, market goes down, consolidate at this particular place. So the range what I expect for this is 18,200 to 18,000 levels, breaking down below this point, and then again coming up very aggressively. So this 200 to 20 points of momentum on the downside we can see, but for this to confirm, we need a close below 18,088 levels. That is key important point, and which should go beyond 13 levels to confirm this scenario. And for bearish momentum scenario, I expect a range of 18,200 to 17,800 levels. For this 400 points of movement, we need a VIX to be above 14, a close below 18,000 level, and one ATR movement with a clear direction that confirms that this kind of trade can come into picture. So for bearish momentum, if this scenario comes into play, and if we get a close below 18,088 levels at this particular point, then for this kind of setup, at every pullback, I'll be doing CE writing and as to capture the consolidation. And once we get a close below 18,000 level at pullback, I'll be taking future short positions with a very tight hedge by having a call as well as the call position to hedge the future short positions, because market has been continuing in the long trades, and this long setup is very much evident. So this, for taking a short trade, we need a very tight hedge. And secondly, these trade setups like 18,500 and 18,700, these are the very strong supply zone which we need to be very careful about. So at this particular place, I'll be taking short trades, positional short trades, and with a very tight hedge of 18,055 level call. So I'll be taking a future short trades at 18,485 levels, and with a call at 18,550 levels. So the weekly call setup, weekly trade plan is as of now this. I'm expecting market to continue further upside with a very tight range and a slightly higher breakout beyond last week high, and then market might fall back again. So trapping all the call buyers at this particular place. So as of now, this is the trade plan, and I expect scenario number two, which is highly probable. But the conviction for this week is very low, as volatility is low, as well as market direction is not that much clear. Market has respected this supply zone as well as this demand zone. So I'm in a wait and watch as of now. Very narrow conservative positions I'll be taking short at this particular place, hardly 0.25 hour or zero point 0.5 hour, not much. And next short trade will be at this particular place. At pullbacks, I'll be seeing how the market is reacting. So as of now, this is the trade plan for the next week. Thank you for joining Trade Talks with Jitesh.